Hi everyone, please check my announcements at the end of the video and let's go over my medium time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with my medium time frame bullish scenario where we're looking for a WXY to the downside in a 3-wave structure where the most common target area for wave Y is between the 0.618 and the 1.236 taken from the high to the low of W to the high of wave X. The fib times that you see on the chart, the vertical lines over here, are taken from the same pivots, and that is comparing wave W with wave Y at the moment. And as you can see, the low that has been made at the moment so far has been made around the 0.618 fib time, which is fine for the end of a wave Y. But if we then zoom in to where this wave Y bounced, we can see that we also had an additional support area, which was the yellow target box over here, for then now a bounce towards the upside. Then the question, of course, is in this particular scenario, is this the end of wave Y and can we expect new highs, like new highs above 31k? Well, that is my alternative scenario because I actually prefer another low to be made either in this particular scenario or the scenario that I have, which is the medium time frame bearish scenario. So what we're looking for over here in potentially this wave Y is this to be the first 3-wave structure to the downside. Then we have a second 3-wave structure to the downside, which is very short in time, as you can see. But then this is the first, second, and this is then the third structure to the downside, where we then have a 1, 2, and then we're looking for a 3-wave structure to the downside again, where this is still an ongoing structure for eventually more downside in this wave Y. However, if this structure, the middle one over here, and then a WXY, so if this wave X is this short, it's quite uncommon. It's not something you really want to see. So we could potentially think about this being the first structure. Then we have a 3-wave expanding flat structure as a wave X. So then we have a WX, and inside wave X, we then have an expanding flat structure over here, followed then by eventually a 3-wave move to the downside in a wave Y. And that is also, again, a very interesting scenario where, yes, we are going to take the invalidation, which means that this will probably not be a 3-wave structure anymore. So then I would expect the target to be the double top. So if we pass this high, then basically what I'm looking for is the double top. And if we cross this double top, then the potential medium time frame bearish scenario comes into play, which is this one over here for higher targets. So in this particular scenario, we then have a WXY where the higher green wave X is not yet finished. So in the bullish scenario, wave X is already finished. But in the bearish scenario, we are still working on a wave X, which again is an expanding flat in this wave X. So we then have a wave A, a 3-wave structure, followed then by a 3-wave structure in a wave B, where the most common target area for a wave B in an expanding flat is the 1.236 to the 1.38, pulled from the low of W to the high of A, which, as you can see on the 4-hour chart, has been very, very nicely respected for then an impulsive structure to the upside, because you want a wave C in an expanding flat to be an impulse in a 3, 3, and then a 5-wave move to the upside, which is the same in this scenario, where you then have this to be a 3-wave structure, then a 3-wave structure where this leg over here in the expanding flat, so an ABC, again is a 5-wave move. So we want to see a 5-wave move from the lows to the upside. But in this scenario, we're looking for higher targets. So if this high gets taken, I'm looking for the double top. If the double top gets taken and we continue, then the next area I'm looking for is this wide target area over here. The wide target area is between 28.9k and 30.4k, and it houses two very important resistance areas. First of all, the point of control, which is the red line at 29.3k, which is the point of control of this structure in wave W. And we have a triple top at 30k over here for potentially a liquidity grab and then a move towards the downside. And what I think is so attractive about these scenarios, and that I'm actually still looking for another move towards the downside, is because so many people have been looking at buying around this yellow target box over here around that 24k area. How often are people right? You know, in the trading world, like, you know, it's well known 90% lose or something, I don't know. But I think it's much more attractive to have like an impulsive structure to the upside in a wave C structure, either in this scenario or in this scenario, have a wave C towards the upside, which is a 5-wave move. So people might think, hey, we're back in an impulse, you know, we're going to go towards 31k highs before then a reversal, because it is a wave C, which some people might not notice, and then we're going to actually go to the downside for lower lows and then eventually a wave Y. I think that's very attractive also in combination with this channel, which many people are looking at online, is that we break out of this channel towards the higher target areas. For example, over here, taking the double top would mean moving, going above the channel. And also in this more bearish scenario, this target area is above the channel. So the breakout traders of the channel might go long here. They might have a bit of success, but then eventually price might go towards the downside, stopping all the breakout longs as well. So I think that would actually be a very nice scenario. If we then go to the lower time frame scenarios, then in my morning video over here, we were potentially looking for a 5-wave move to the upside, and then a wave 1, 2, 3, 4, and then a wave 5. So in the morning video, price was ranging somewhere over here, which was fine in time for a wave 4, because wave 4 usually is longer in time than a wave 2. So in the morning when I made the video around here somewhere, this length for a wave 4 in time is perfectly fine compared to a wave 2. However, throughout the day, we continued ranging. And even though I was working with my other business and doing all sorts of other stuff, I was on my phone updating the group as well. And eventually I wrote this over here in the updates section. And then I have to scroll to the upside a little bit, which is here. If price is moving down, look how big wave 4 is compared to wave 2. So look at the time, and we'll do this on the live chart, but look at the time of this potential wave 4 to this wave 2. So then I wrote, after the bounce on the 382, which was on the yellow 382, I'll show that in a second, a 5-wave or a 5th wave to the upside would have been nice. However, taking the low again, be wary of further downside because it starts to feel too long, this range. Have your plan and strategy and act upon what the market shows. And then also here I mentioned, just in case, keep an eye out for the brand new daily and daily naked point of control below price, which also are in confluence with the golden pocket and the daily naked point of control. So if we then go to the live chart, what I was basically mentioning over here is as price was ranging, somewhere over here I was like, guys, I'm not really feeling a wave 4 anymore in this scenario. It starts to become too long. So if we are going to take this low again, be wary of further downside because it didn't really feel like we had another wave 5 to the upside as it just took too much time. Then eventually price moved to the downside. I updated everyone. Hey, we got a golden pocket over here. We got a daily. Now we just missed out over here on hitting it, but it is an important area of support also in combination with this order block that we have over here, which actually has very nicely been touched, as you can see, right? So that's actually some nice confluence all around this area where price now wicked, massive wick back towards the upside. So that was quite interesting. And then this being still a bullish scenario. So in this scenario, from the lows over here, this was the end of then the structure that we spoke about. And now we're working on, again, a 5-wave impulsive move to the upside and then potentially a wave C, where this is only the first structure in a wave A or a wave 1, followed by a 3-wave corrective structure in a wave B or 2, now either in a wave 3 or a wave C. A wave C usually is a little bit lazy compared to a wave A, usually takes like the same amount of time as a wave A, and also usually the volume in a wave C is quite similar to that of a wave A. Now, as you can see, the beginning of this potential C or 3 to the upside actually has more volume than a wave A over here. So that might hint at potentially this being a wave 1, 2, and then we're now in a bigger 3 towards the upside, where if this is a bigger wave 3 towards the upside, you at least want the 1.618 to be hit, which is sitting at 26.8k. And if this is a wave C, then the target area for wave C over here, pulled from the low to the high of A to the low of B, is sitting between 26.1k and 26.4k. Now, if I open my target boxes, what is important is that both of these targets are actually above my resistance area over here. And this resistance area is between 25.9k and 26k. So both of these require price to continue moving to the upside past this resistance area. Now, finally, you see a 1-to-1 and a 1.236 over here in pink and white. And I quickly want to highlight this. If I go to the 3-minute, just look how well respected this was. So we had a very quick move to the downside, very quickly back to the upside. But if you take a Fibonacci trend-based fib extension from the high to the low, to any of these highs really, then you will see that this is the target area for a 3-wave structure in a WXY or an ABC, doesn't really matter. And it has been incredibly well respected. So even though volatility kicks in, Elliott waves and the targets over here are very nicely respected. Yeah, we have a wick below the 1.236, but look how it's closing on the 3-minute right on top of the 1-to-1 over here. And if you go to the 1-minute, it closed very nicely inside the most common target area for a wave Y or a wave C. So that is actually very, very nice for then this move towards the upside in the more bullish scenario. And if we then go to the bearish scenario, which as it stands feels a little bit like an alternative because of this move over here, but we always need a bearish scenario. where in this particular scenario, there's two potential counts going on. First of all, we then have over here a move to the upside, or actually a move to the downside in a 3-wave W, 3-wave X, and this is all part of a 3-wave to Y to the downside, where Y is then an expanding flat in a 3, and then you actually want to see a 3 and then a 5-wave move to the downside. As it stands, this structure over here is not looking like a 3-wave structure, so this is very much an alternative scenario. At the moment, this looks very impulsive, right? If you look at the way it is like going towards the upside, you want to see a 3-wave structure in then this wave B. You could say, hey, we have a 3-wave structure over here, but then you take a fib from the low to the high of the first structure to then the low of this range, and then you'll see that if this is a zigzag in a 5-3-5, then the minimum target for a zigzag is the 1-to-1, which is above the target box, right? So this 1-to-1 is, by the way, sitting at 26K, 26.1K. So that is still higher and still above this target box. So that is quite an alternative scenario, but one to keep in mind as it has confluence with this blue target box over here. And then we have the yellow count, where the low of the yellow count is this W. And then we have a 5-3-5 wave move to the upside, where the most common target area then for this wave X in an A, B, C, which is a zigzag structure, is between the 1 and the 1.236, which is between 26.1K and 26.4K. But as it stands now, it still feels like a little bit of an alternative scenario, but just, there is a resistance area where we are right now, okay? So it's very important. This is, in my opinion, no financial advice. This is not a long area because we're at resistance over here. The longs were either made over here or you were lucky to catch the knife, which is something I usually don't really like to do. But yeah, we have to wait and see. The weekend is coming up. Usually the weekend is known for ranges, so we might just range below or around this target box, and then we'll see what's going to happen with, for example, the CVD divergences as well. Because if we go to the CVD divergences, you could say, hey, we have some bearish divergences. Low over here, lower high on price on the yellow line, higher high on the CVD. However, I like to look at the CVD divergences on the right side of a new high or a new low, meaning this over here is a new low on the chart. So I want to see bearish divergences locally after this low over here. So I don't take into account this structure. I want to look at bearish divergences locally at what is happening over here if I think about potential bearish divergences, just like what happened in this range, right? Lower highs on price, higher highs on the yellow CVD, bearish divergence, bam, pricing moving towards the downside. We did have, during this move to the upside on the 1-minute time frame, we did have some like bullish little like CVD divergences on the 1 minute, but eventually the 50-minute divergences took over. Price moved impulsively to the downside and immediately back towards the upside. So as it stands now, the divergences are pretty much neutral. Then I want to show you my first announcement is that I made a one-pager for all of you about CVD, and you can download it right here in the Koenz update section or in the Good to Know channel over here. And I think this will be very, very useful for you if you want to learn more about CVD. It has everything that you need to know about CVD. And if you want even more information and more detail, there are links to my beginner's guide, which is on YouTube. So you can just download it over here. It's a PDF. Hopefully, you're going to make good use of it and it will help you in your trading. And secondly, I'm going to participate tomorrow in the Strong Viking, which is a 42-kilometer over 100 obstacles, so 42 kilometers in length, and I have to endure over 100 obstacles. So it's an obstacle run, 42-kilometer obstacle run, and I will be basically gone for the whole day. So I won't be able to make a video in the morning, in the afternoon, 1 p.m., and also not 7 p.m. Central East European time, because I really have to like focus. It's one of the biggest physical challenges that I do so far in my life. So I need to prepare in the morning. I need to tape my feet, all that sort of stuff, because this is going to be quite a challenge. So wish me luck. That also means that the next update will then be Sunday morning, basically. Hopefully I will be able to show you a picture of my medal. Of course, if I get a medal, if I manage to finish this race, I have a maximum time of 7.5 hours to finish 42 kilometers and 100 obstacles that you see over here. Then you get a medal. So hopefully after this event, I'll show you guys a medal in the Discord group and in the Telegram group that we have. So that is basically the two announcements. So you guys are updated, and I hope this video was helpful or valuable to you. Please check out the memberships and also the most recent educational video about CVD, which I think is the best trading indicator you can use. And for now, thanks for watching and subscribing, and I'll see you at the next one. Bye-bye.